AI in accounting. AI is already changing how accountants work, and understanding where it fits in your workflow gives you a competitive edge. The question isn't whether AI belongs in accounting, it's already here. What matters is knowing which tasks AI can handle, which need AI assistance, and which require your professional judgment alone. So in this lesson, you'll map your workflow to identify realistic AI entry points, without overcommitting to automation that creates more problems than it solves. Why workflow mapping matters. Most accountants approach AI backward. They start with, what can AI do? Instead of, what do I actually need AI to do? This leads to three common problems: tools that don't fit your actual workflow, automation that breaks under real-world conditions, and time spent managing AI instead of benefiting from it. The smarter approach is workflow mapping. Audit what you actually do each week. Classify tasks by how AI can realistically support them. This approach helps you identify where AI might fit safely, what to avoid, and which tasks benefit from AI assistance versus full automation. Based on the suggested workflow mapping order, what do you think is most important to understand before implementing AI tools? Which tasks are repetitive enough to automate reliably? Which tasks should remain entirely human-driven? Which AI tools your competitors are using? Which tasks need AI assistance but still require your judgment? Indeed, different accounting tasks relate to AI differently. Automatable, repetitive, rules-based tasks. AI can handle with minimal oversight. Transaction categorization, data entry, invoice matching. AI-assisted, complex tasks where AI accelerates work but requires professional review. Variance analysis, tax research, forecast modeling. Human-only process, tasks requiring judgment, client relationships, or regulatory accountability. Final reviews, client strategy, audit sign-offs. Understanding these categories helps you deploy AI strategically, instead of randomly. The biggest mistakes happen when accountants try to automate AI-assisted tasks, or assume human-only tasks can be delegated. So, to solve, you can upload your weekly tasks to Gemini and ask it to classify your own workflow so you see exactly where AI fits and where it doesn't. Great, now you can see where AI realistically fits in your workflow, not based on hype, but based on your actual weekly tasks. Why do you think it is important to distinguish between automatable and AI-assisted tasks? Because automatable tasks are more important than AI-assisted ones, and moreover, AI-assisted tasks cost more to implement. Because automatable tasks can run independently, while AI-assisted tasks require your professional review. Because automatable tasks are always faster than AI-assisted ones. Identifying entry points. Once you've classified your workflow, the next step is to prioritize where to start. Not all automatable tasks are worth automating immediately. Some require clean data you don't have yet. Others save 10 minutes weekly, but take hours to set up properly. AI-assisted tasks can provide faster ROI because they don't require perfect automation, just better support for work you're already doing, with your professional review ensuring accuracy. Gemini can help you evaluate which tasks offer the best time savings relative to implementation effort. See how this works? Just like that, you can get a detailed starting point on the AI implementation roadmap. Not just use AI for everything, but a strategic sequence that builds competence while delivering immediate value. What AI can't replace. Here's what matters most. AI doesn't understand context the way you do. For example, it can categorize transactions, but it doesn't know when a client's spending pattern signals business trouble. So, it can draft memos, but it can't navigate a difficult client conversation. It can flag variances, but it can't explain why they matter strategically. Understanding this is crucial for responsible AI implementation. Your value as an accountant isn't data processing. It's interpretation, judgment, and client relationships. When used appropriately, AI can help you with processing so you can focus on what actually differentiates you, turning numbers into business insight and building trust through advisory work. Building AI competence gradually. AI adoption isn't binary. You don't go from zero to fully automated overnight. The accountants succeeding with AI are building competence incrementally. Start with one automatable task. Master it. Add another. Once you've validated the workflow and trust the results, you can move to AI-assisted work, while always maintaining professional oversight. This gradual approach prevents the two biggest AI failures: over-automation that breaks your workflow and creates professional liability risks, and under-adoption that leaves efficiency gains on the table. Neither speed nor efficiency should compromise professional standards. You shouldn't try to revolutionize your practice immediately. Instead, you need to systematically identify where AI adds value and implement it strategically. Your path forward. Mapping your accounting workflow to AI capabilities is the foundation everything else builds on, and that's what you learned so far. However, how exactly can AI be used, for example, in transaction categorization? That's what you're going to discover next. Beyond this lesson, you'll learn to automate routine bookkeeping tasks, accelerate tax research and document analysis, draft client communication faster, support variance analysis and forecasting, and position AI as a tool that enhances your advisory value. Let's start building your AI-powered accounting skills. Bookkeeping automation basics. Transaction categorization, invoice matching, and reconciliation checks consume hours of your week. Yet, as was indicated in the previous lesson, they follow predictable patterns that AI can learn. So, this lesson focuses on the most straightforward AI application in accounting: automating routine bookkeeping tasks. You'll learn how to structure transaction data for AI processing, use Gemini to categorize and flag anomalies, and maintain oversight to prevent compounding errors. Let's dive in. Why bookkeeping automation works. Bookkeeping tasks are repetitive by nature. The same vendors appear monthly. Expense categories follow consistent patterns, and reconciliation follows established procedures. This predictability makes bookkeeping ideal for AI automation, while, of course, maintaining proper oversight. The key is understanding what AI can reliably handle versus where it needs your validation. AI excels at pattern recognition across large transaction volumes, matching invoices to purchase orders, flagging entries that deviate from norms. AI requires oversight for new vendor categorization, unusual transaction amounts, reconciliation exceptions, and anything involving judgment calls. Structuring transaction data. AI categorization quality depends directly on data structure. Inconsistent formats, missing vendor names, and vague descriptions create categorization errors that compound over time. Therefore, before automating, your transaction data needs basic structure, consistent vendor naming, meaningful transaction descriptions, and standardized date formats. Most accounting software exports transactions in formats Gemini can process. The more structured your export, the better AI can categorize accurately. To see how this works, you need to attach your transaction list and ask Gemini to categorize it. Notice how Gemini categorized routine transactions confidently, but flagged unusual entries for your review. This is exactly how AI should support bookkeeping, handling the predictable work while escalating exceptions to you. Why do you think Gemini flagged the $8,750 consulting charge, even though it successfully categorized it? Because the vendor name is unfamiliar to the system. Because AI cannot categorize professional services accurately. Because all consulting charges require manual review. Because the amount is significantly higher than typical transactions in that category. And invoice matching and reconciliation. Beyond transaction categorization, AI can assist with invoice matching, comparing invoices to purchase orders, and flagging discrepancies. This is particularly valuable for businesses processing high volumes of invoices, where manual three-way matching, PO invoice, receiving report, consumes significant time. Gemini can identify mismatches between expected and actual amounts, missing documentation, and reconciliation exceptions, though you still validate and approve. Let's see how AI supports reconciliation checks. See how AI flags variances that would be tedious to catch manually? The duplicate rent payment and missing lease payment both need immediate attention. Exactly the kind of exceptions where your professional judgment matters. What's the main risk of using AI to categorize transactions without any manual review process? The accounting software will reject AI categorized transactions. You'll spend more time reviewing than you save with automation. Small categorization errors compound over time and propagate through your books undetected. AI categorization is too slow to be worth implementing. Handling anomalies and exceptions. The real value of AI bookkeeping isn't just speed, it's consistent anomaly detection. Manual reviews miss patterns. You might overlook a duplicate payment or not notice when a vendor's pricing quietly increases 15%. AI flags these systematically because it compares every transaction against established norms. But here's the critical part. AI doesn't know why something is unusual, only that it is. A flagged transaction might be an error, or it might be legitimate but uncommon. So, you provide the context and make the call. AI just ensures nothing slips through unexamined. Great work. See how AI provided context for each flag? Not just this is unusual, but why it's unusual and what you should check. This structured approach to anomaly review is far more efficient than manually scanning transaction lists in the hope of spotting problems. Building trust in automation. Bookkeeping automation isn't binary. You don't flip a switch and trust AI completely. Trust builds gradually as you validate that AI categorization matches your expectations, flagging works reliably, and errors are caught before they compound. This takes weeks, not days. Start conservatively. Automate one category, office supplies, utilities. Validate results for a month, then expand. This measured approach lets you build confidence in AI accuracy before increasing reliance. Your path forward. You've just learned how AI can support routine bookkeeping, categorizing transactions, matching invoices, flagging reconciliation issues, and detecting anomalies systematically. When implemented with proper oversight, these automations can free 3 to 5 hours weekly while maintaining accuracy and professional control. What's next? In the next lesson, you'll learn how to use Gemini to accelerate tax research and review, identifying relevant regulations, summarizing implications, and generating review checklists that reduce research time while ensuring thorough coverage. Let's continue building your AI-supported accounting practice. Tax research and review. Great progress so far. You've learned to map your workflow and automate routine bookkeeping tasks. Now let's tackle something else. Tax research. In this lesson, you'll learn how to use Gemini to identify relevant regulations, summarize complex tax implications, and generate review checklists that reduce research time while ensuring thorough coverage. As a result, this will support your tax work with faster, more structured research. Before we start, what do you think is most important to remember when using AI for tax research? Tax interpretations require professional judgment AI cannot provide. AI accelerates research, but you validate against primary sources. AI eliminates the need to consult with professional literature and regulations directly. AI-generated summaries need verification for accuracy and currency. Why tax research takes time? Tax research is complex because regulations change frequently, interpretations vary by jurisdiction, and specific fact patterns determine applicability. Many people often search for recent regulatory updates affecting specific deductions or credits. Traditionally, this means navigating dense IRS publications, cross-referencing code sections, and tracking down relevant rulings, work that's necessary but time-intensive. AI can accelerate this research phase by quickly surfacing relevant regulations and summarizing key points in plain language. Structuring tax research queries. The quality of AI tax research depends entirely on how you frame the question. Vague queries produce generic answers. Specific queries, with relevant context, jurisdiction, and tax year, produce focused, useful results. Therefore, effective tax research prompts include specific tax topic, not tell me about deductions, but home office deduction rules for S-Corp owners. Jurisdiction, federal, state-specific, or both. Tax year, regulations change. Specify which year applies. Fact pattern, enough context for AI to identify relevant provisions. Let's see how inputting a structured prompt improves research quality. See how this works? The structured prompt produced focused, actionable research, not a generic overview, but specific limitations, recent changes, and relevant code sections you can verify. Why does the prompt specify 2024 rather than asking about current Section 179 rules? Because the 2024 rules are simpler than those of other years. Because AI doesn't understand what current means. Because older regulations are more reliable than recent ones. Because tax regulations change annually, and you need year-specific information. Summarizing complex tax implications. Beyond finding regulations, AI can help you understand complex provisions by breaking them into clear, structured summaries. This is particularly valuable when new legislation passes, and you need to quickly understand how it affects multiple client situations. Gemini can take dense tax code language and translate it into structured implications. Who's affected, what changed, and what actions clients should consider. Let's see how AI structures complex tax information. See how AI transformed complex QBI rules into structured categories. Who's affected, what the limits are, what actions to take. This summary doesn't replace your tax judgment, but it accelerates your understanding and helps you identify which clients need deeper analysis. Based on what you learned, what's the primary risk of using AI-generated tax summaries directly in client advisory memos without verification? AI can misinterpret regulations or miss recent changes, creating professional liability exposure. AI summaries are always too generic to be useful. The IRS specifically prohibits the use of AI-generated tax advice. Clients won't understand AI-generated language. Generating tax return review checklists. Beyond research, AI can help you create structured review checklists, tailored to specific return types or client situations. This ensures nothing gets overlooked during final review, particularly valuable for complex returns or situations you encounter less frequently. Gemini can generate comprehensive review checklists based on return type, client circumstances, and recent tax law changes that might affect the filing. Let's see how AI structures review workflows. Great work. Notice how comprehensive this checklist is, covering technical requirements, common errors, and recent law changes. You can customize it for specific partnership situations, but having a structured starting point ensures nothing critical gets overlooked. Building your tax research workflow. Effective AI-assisted tax research follows a consistent workflow. 1. Frame the question specifically. Tax year, jurisdiction, relevant facts. 2. Use AI to identify regulations. Quickly surface relevant code sections and guidance. 3. Verify against primary sources. Confirm AI summaries match authoritative publications. 4. Apply professional judgment. Determine how regulations apply to your specific client situation. This workflow doesn't eliminate research time entirely, but it can reduce it by 30 to 50%, particularly for unfamiliar provisions or complex new legislation where you're getting up to speed quickly. The time saved on research creates capacity for higher value client advisory work and more thorough analysis of complex tax positions. Well done! You've just learned how AI can accelerate tax research, helping you find relevant regulations faster, summarize complex provisions clearly, and generate structured review checklists. When used with proper verification and professional judgment, AI research support can significantly reduce time spent on routine tax questions while ensuring thorough, accurate client service. What's next? In the next lesson, you'll learn how to use Claude to analyze long financial and audit documents efficiently, extracting key findings, identifying